Deeper analysis. Gold's historic bull run, macro connections. Gold's 46% rally in a year is not just another speculative bull run, it is a signal that the financial system is shifting. Let's connect the dots with current macroeconomic events and what this means for the future. 1. What's really driving the gold price surge? Many mainstream narratives point to inflation and market demand, but these are only partial explanations. The real underlying causes are central banks are dumping dollars and hoarding gold. In 2023, central banks bought a record 1,136 metric tons of gold. China, Russia, and BRICS nations are de-dollarizing and seeking alternatives to the US dollar as a reserve currency. The IMF recently hinted at a new Bretton Woods moment, suggesting a potential overhaul of the financial system. Geopolitical instability, dollar weaponization. US sanctions on Russia, freezing reserves, showed that the dollar can be weaponized. This pushed many countries to diversify into gold. Middle East tensions, Russia-Ukraine war, and US-China rivalry have increased demand for gold as a safe haven. BRICS expansion. The group is actively working on alternative trade settlements, many backed by gold. Growing trust issues with fiat currencies. Global debt-to-GDP ratios are at unsustainable levels. The US government deficit is skyrocketing, pushing the Fed into a lose-lose situation, inflate or let the system collapse. The recent rise of digital currencies, CBDCs, could signal a shift toward a new monetary framework, where gold may play a crucial role. 2. Why the paper gold market is at risk. The gold market is not as liquid as it seems because most of it is traded on paper. The risk? A run on physical gold could expose a massive supply-demand imbalance. COMEX London bullion market are fragile. COMEX paper gold market operates on a fractional reserve system, meaning it has far more paper claims than actual gold reserves. If confidence in paper gold weakens, there could be a short squeeze where investors demand physical delivery and expose shortages. If large players, central banks, sovereign funds, stop trusting paper gold, a liquidity crisis could unfold. BRICS and physical gold reserves. China, Russia, and India are importing huge amounts of physical gold, not relying on Western markets. There are rumors of a BRICS gold-backed trade settlement system, which could bypass the dollar altogether. If BRICS or other nations introduce a gold-backed currency alternative, the current paper gold system could collapse. 3. 2 possible outcomes. What's next? Scenario 1, a controlled reset. Central banks could transition to a new financial system with a partial gold backing. The US and Western allies may revalue gold to stabilize debt markets. A new global monetary agreement, similar to Bretton Woods, could emerge, possibly incorporating gold-backed digital currencies, CBDCs. Scenario 2, systemic breakdown. Paper gold collapse, fiat currency devaluation, hyperinflation. Gold soars past $3,000, $5,000 Oz as investors rush to real assets. Financial institutions struggle, global liquidity crisis follows. How to prepare. Own physical gold. Avoid over-reliance on ETFs or paper gold. Diversify into hard assets, silver, Bitcoin, energy, commodities. Monitor central bank moves. Watch for gold purchases. BRICS monetary shifts. Conclusion. Connecting the dots. Gold's rally is not just another market cycle, it's a warning sign of a monetary system shift. The next 6 to 12 months could bring a gold revaluation, a BRICS monetary move, or a paper gold crisis. Key takeaway: position for a potential monetary reset by focusing on real assets and tracking central bank actions.